Hey everyone, welcome to New York City on this Friday night. And I think the Knicks game is going on right now in Madison Square Garden. Ivan, what's up? Ibrahim Azam, what's up Ibrahim? Hope you're doing well. I see Mike. How are you, Mike? Happy Friday. Great action in the market today. S&P closed up yet again. Dave, what's going on? RJ. Mike G. Currently standing right outside of 1 Vanderbilt. This is the corner of Madison Avenue and 42nd Street. And you can really already start to see the traffic piling up here. I would not recommend driving into the city today. Vincent 23, Shane 71. Good to see everybody. DC322 says, hey everybody, big night at MSG, huge night. Now, I don't really follow basketball, but I think this is the final game, right? Game 6 or something like that. And I believe if the Knicks win, they advance to the next thing or whatever, or whatnot. Anyway, Jennifer, what's going on? Thanks for joining us. Shoots Tech says, how's business been? Business has been really good, thank God. Hopefully this summer is a big summer. I need a really, really big summer. So we'll see what happens. Trust the same for you. I have a few big projects coming on in Brooklyn and Brighton Beach. Dennis the Menace, Jeff in Southern Tier, New York. What's up, Jeff? I'm actually going to spend the majority of the weekend in upstate New York. I'll predominantly be in Rye and Rye Brook. I think this is the 16th day out of 19 sessions that the S&P 500 closed positive. I mean, the market has really been on a tear. This is really what I would like to call a power trend. Sally's here, Jennifer, RJ, welcome. Kathleen, good to see you. What was interesting though is right after the market closed, Moody's decided to downgrade the United States. We'll see how that plays out on Monday. Not a whole lot of action though. After hours, a little bit. Some stocks are off a little bit, but not much, I would say. Jay is here from South Korea. Peter, this is 33-20. Knicks over the Celtics, 9 minutes of the second quarter. Peter, are you a big basketball fan or big sports fan? Alan, what's up? Big day in the markets. And, you we're official. I was looking at the volume for today, right at the close, tallying it up, and we've officially entered what's called a power trend in the market, which is the exact same thing that happened as the market was rallying from the COVID lows. We had that lockout rally where the NASDAQ 100 followed the 21-day moving average all the way up. So this market is rocking. Sue Rollins, what's going on? Welcome. JC, hopefully we get some action in Bitcoin over the weekend. We'll see what happens. Today was a huge day in New York. Mike Novogratz and team was actually right down here, right down the block this morning at the NASDAQ, ringing the bell as Galaxy Digital finally lists in the United States on the NASDAQ. Amazing day for the, I would just say, digital asset ecosystem overall. Amazing day. Anyway, we'll just do the nightly audio and visual check. So if you guys can hear us, and if we're streaming in 1080p, just give a thumbs up in the chat and we'll get started. Mike G, this is Tom. Wall Street Journal posted plus 21% in home sales. 10 million home value and above in Manhattan. 10 million plus in Miami-Dade since February. Yeah, I mean, a lot of the deals that are getting done are big deals and cash deals too. Now, Mike, to your point, there was an article, I actually have it in my hand, funny enough. This was a really interesting article today in the Journal. Not too sure if you guys saw it, but it's the Heard on the Street section. It says first-time home buyers are tapped out. And really the sentiment of the article was talking about all of the different incentives that a lot of the builders are giving to first-time home buyers, like D.R. Horton and Lennar, Pulte Group. I would say much to a lesser extent of like a Toll Brothers, right? Because I would say, I mean, and maybe you guys would agree, but Toll Brothers, I wouldn't say if you're buying a home from Toll Brothers, that's going to be your first property, right? That's more of maybe, you know, a little bit more on the luxury side, if you will. But there's a lot of home builders, like if you're going to buy a home from, you know, D.R. Horton, Lennar, Pulte Group, there's a lot of incentives like rate buy downs and the like, which is making, you know, it a little bit more attractive to buy a new home as opposed to a resale. But there was one excerpt from the article that was really eye-opening. Let me try to find it. Yeah, check this out. This is such an interesting stat from this article. Let me read it for you guys. It says the median price of a new home currently costs 1% less than a median existing property, compared with 17% premium historically. So usually if you want to go buy a new home as opposed to an existing home, new homes usually command a 17% premium in terms of a pricing premium over existing homes. But now, you know, that transactions really aren't getting done. Prices have come down, and with all of these different added incentives, that spread is now 1%. And that's kind of interesting to think. So it's almost more advantageous now to buy new product, right? Because if you're buying new product, you know, there's warranty, and then you have a punch list. In New York City, if you're buying like a new condo or something, you call it a sponsored sale. You're buying the condo right from the developer. So before closing, you do a walkthrough, and then you have a punch list. So any of the things that are wrong with the unit, since you're buying it new, they would fix. So pretty interesting stuff. Let me just see if I could read that again for the audience. It says the median price of a new home currently costs 1% less than the median existing price, compared with the 17% premium historically based on UBS housing data. Interesting stuff. Tap out says, think Tesla brand is in recovery. Stock is at $349 today, and $220 low. Yeah, I think Tesla put in a low, and I think the market put in a low about 2 weeks ago. A lot of stocks are breaking out, breadth is expanding, and the market has been up 16 out of the last 19 days. And all the leaders are out. I mean, we'll talk about it. Anyway, well, good evening, everybody, and welcome back to Walks of Wall Street. It's a beautiful Friday here in New York City. Lots of energy in the city, too. We go down to 34th Street and 7th Avenue. That is Madison Square Garden. And you have the New York Knicks playing against the Boston Celtics. I think the game should get out right around when we finish the live stream. So maybe we'll have to do a complete loop around and check out 34th Street, Herald Square, because it's probably going to be pretty crazy as everybody gets out of the game, especially if the New York Knicks win. Another strong day for the markets. The S&P 500 closed up, I think, 0.6%. So, again, another green day. This is the 16th day out of 19 sessions or trading sessions that the market has ended higher. And we've been talking about this for like 2 weeks. Since we returned to the live show, I've been on about a month hiatus. And I made a little bit of a projection to say, look, I think, the bottom is in here. You have all of the characteristics of a bottom, the massive blow off in volume, the capitulation, the record negative sentiment in the market, and also you had that put to call ratio go to Mars. But the most important thing is you had that cooperation with the VIX, or the CBOE volatility index, blowing off to 60. Now, for context, when we had the pandemic, right? Think about all of the uncertainty we had during the pandemic, and think about the seriousness of the pandemic for a second, okay? This was literally life or death, right? Regardless of what your, opinion is in hindsight, right? Hindsight is always 20/20 about the pandemic, but once we first knew about this thing, this was like life or death. I mean, we thought people, like millions and millions and millions of people were gonna die, literally shutting down the world economy, and the VIX blew off to 80. So in comparative analysis, slapping tariffs on, broad-based tariffs on the world gets the VIX to 60 and gets these levels of capitulation. I mean, you had, some of these leading stocks off 60, 70+%. That is, textbook kind of fear and capitulation, so to speak. So this is a lockout rally. I mean, we're stone's throw away from new all-time record highs on the S&P 500. Lots of people are underinvested this market. Lots of people have no exposure to the leaders. Hold that thought for a second. Hope everything's all right. So we'll see what next week brings. I mean, earnings season, relatively speaking, is really behind us. Let's get away from this guy. Earnings season is, for the most part, kind of behind us, right? After the closing bell today, Moody's came out and downgraded the United States. So we'll see if that, kind of news starts our first correction of the new bull market. This market is up over 23% without a mere 5% pullback. It's just been up in a straight line, almost all the way back to new record highs. So anyway, that's the deal. I would say the one thing that's of concern is just kind of the action in the bond market, right, that we talked about over the past 2 days. You have, some selling in the bond market. Rates continue to remain high. If you just go to cnbc.com/bonds, you could look at the entire yield curve yourself. And that's the story. So let's see who we have in the chat, and let's go ahead and get started. I may actually want to cross over to Hell's Kitchen tonight, because I think 6th Avenue is just going to be too busy. It's going to be too crazy over here. I see D is here, Big Prime. What's going on? Chris. How are you, Chris? Hopefully you've had a good week, and wishing you a good weekend. I see your friend Peter, Patrice 2020. Welcome. Sally is here. Thanks for joining. Lindsay, DC322. Trevor L says the bond vigilantes may have something to say after the Moody's downgrade. We'll see. I think still there's a lot of people that are have either no exposure or very, very underinvested. And the leaders are out. I mean, stocks are acting well. We'll let the market see. We'll let the market kind of tell us what's going to happen. But maybe something that we'll get into on the Sunday night live stream is today the market triggered something that's called a power trend, which is exactly what we saw during that V bottom of the COVID pandemic, when the NASDAQ rode the 21-day moving average all the way up into the highs. And this is why, it's so important to kind of go all the way back to those 2 follow-through days we had, right? About 2 weeks ago. And this is when, the market was on its 3rd rally attempt from the lows, closing higher on higher volume of the previous 2 days. And on follow-through days, you got to commit some sort of capital to your ideas. And remember, I was calling some money managers that I know, and I'm like, what did you buy? We had a follow-through day. You have to buy something, right? If you follow like Can Slim and William J. O'Neill Securities investing style, it's like you got to buy something on a follow-through day. You have to pick your, top ideas, and you got to buy something. And as I was calling around and texting my friends, everybody was like, I committed a little bit of capital, but I'm not convinced. I'm gonna wait it out. And I'm like, dude, you gotta throw a position on a follow-through day. And if you would have bought any of those companies, like the leaders, Netflix, Spotify, Uber, all the kind of ones that we were talking about, Palantir, you're up 38%. I mean, if you're on margin or your options, you're up big, and you have a lot of cushion. So assuming this market does pull back, you have a lot of cushion in those leaders, a lot of cushion, which is good. So we'll see what happens. Arctic Paratrooper, what's up? Welcome to New York City, more specifically Times Square. Shoe Lady, what's going on? Dave says, I saw my first Cybertruck today. Speaking of Tesla, Dave, in Miami, Florida, there's rumored to roll out the Cybercab in Miami, but I believe today was the first day where you had the Google's Waymo. So if anybody's in South Beach or Miami, Florida, I believe now you can take a Waymo on the Waymo application. Sandra Lay says, hey Thomas, any more news on United Healthcare under investigation for fraud? I don't know. I actually muted that story this morning just because I don't really have any skin in the game on it. Somebody had come into the chat and had asked me about United Healthcare before the fraud news came out, and I had said, it's kind of reminding me a little bit of Luckin Coffee, which just so happened to, come out in 2019 and say that they cooked the books to the tune of about $300 million, and then the stock was delisted. So I don't know what's going to happen to United Healthcare. I think the big thing there is the fraud real or not, right? Just because somebody makes an allegation doesn't necessarily mean that you've committed fraud. My whole thing is that I just think the risk reward to bottom fishing or trying to buy the company in this environment, when there's so many other great companies that are breaking out, I just don't see the risk reward there. I mean, if you want to go and buy the stock, I mean, good luck to you, but that's just kind of not the strategy I run, and I don't really know too much about the allegations to make an informed investing decision on it. Deja Vu says Dick's Sporting Goods is buying Foot Locker. Yeah, I heard about that. That's another kind of sector that I'm not very well versed in, right? I wouldn't really know anything about that either. Hey, Brad's Brain is here, says nice Uber day today, and yes, I have a nice 115 cushion on Palantir. And I mean, Brad, and you kind of know this better than a lot of people. You're kind of one of those can slim style guys, but right on the follow through day, that's why on a follow through day you commit capital to your top names, because assuming that they work, right, you have a really nice cushion. But God forbid it doesn't work, you just take your 5 to 7% loss and then you wait for the next follow through day. Yeah, Uber did have a pretty good close today, but it didn't close as well as I wanted it to. Right, I would have really liked to see Uber close at the dead high of the day. Unfortunately, it didn't. But hey, it had its highest weekly close of all time. So Uber's up and out. Uber's breaking out. So I have a position. Peter says United Healthcare is and was a top 10 holding in the Magellan Fund of Fidelity. Well, here's the thing, right? And not to make the entire, stream about United Healthcare. Every so often, you have one of these canary in the coal mines. I mean, nobody expected Enron to be Enron, right? I mean, maybe there was a few people that suspected Enron to turn into what Enron turned into, but I don't know. I just think it would be very dangerous. I mean, obviously, if this thing unwinds the way a lot of people think it's going to unwind. Now, the stock of United Healthcare, I think, had a little bit of a bounce today. But I'll just make kind of a comment on the price action. When you see a stock bottoming, right, off of that much capitulation. Now, if anybody just wants to pull up a chart of United Healthcare today, feel free to do so. But if a stock is going to put in a bottom, you want to see it up much more than it actually was up today, right? So I think the stock was up was it even up double digits? Was it up like 13% today? I don't know. Let me know in the chat what it closed up. But you actually want to see a bigger candle than that. I was actually not impressed with how the stock closed today, even though it closed up. I mean, for being down 50% in a matter of 2 weeks, that thing should have been up freaking 25% on the day on thunder volume, but it really wasn't at all. It was like kind of a wimpy, rally. Now, if you remember correctly on the indices, right, going back to the Trump tariff crash, you had, you saw the headlines, right? The worst day in the Dow Jones Industrial Average since, the 1929 stock market crash. You see those type of headlines. And then the next day you see, the best day for the Dow Jones Industrial Average since, the 08 financial crisis. Those are the types of headlines and the price action you see at a bottom, like these exacerbated moves, right? So you have the massive capitulation to the downside, like 2,000 point down move in the Dow, and then the next day you have like the best day in a decade. That is reminiscent of a movement at the bottom, right? These huge moves on volume and then a snapback rally in the other way that is like over the top. You didn't see that in United Healthcare today. So again, I don't know what's going on. I know there was some insiders buying, but just for me, I'm not going to get involved with it. I don't own it. I just think there's a lot other higher risk reward trades you can get yourself involved in, because I mean, you know, this thing could be bad. Who knows? 456 as there was news that some insiders bought the stock. Yeah, I saw that too. UniJ23 is here. What's going on? Thanks for joining us. Hope you're doing well. I don't know, that's kind of the way I think about it. It's, do I really need to be, like, think about it like buying a car, right? And you have an unlimited budget. Are you gonna buy the best car on the lot? Or are you gonna buy, you know, the junk? I don't really wanna bottom fish with the junk. You know, if you could buy any stock on the market, do you really wanna be taking your risk with United Healthcare? And I mean, now maybe you turn out and make out great, but I don't know. Hey Natalie, what's going on? Hope you're well. Thanks for joining us. We're headed northbound on Broadway. This is West 51st Street. This is the Din Tai Fung. This is a very good spot here. Brad's Brains says bottom fishing is gambling. Look for value that's expressed in volume and price action. I agree. And there's also a major difference between bottom fishing and individual stocks and trying to like knife catch an index, right? There's a huge difference there. So if you compare this to what we just went through in the NASDAQ and the S&P 500, when you had those peeling off, 5-6% in a day on massive volume, that is much different than, United Healthcare, down, 30% in a day, right? Because that's one company. But if it's an index, right, in terms of this case, S&P 500, a basket of like 512 stocks, something to that like, you're buying, the cream of the crop companies that are all in a pan sell-off, not risking your money on a capitulation, on a potential fraud. Now let's actually, just for the hell of it, let's just assume that all of the allegations are correct, and that this does turn out to be that there was some fraud at United Healthcare. Okay, let's just assume that for a second. That doesn't mean this thing is going to go to zero, by the way. It doesn't, and it probably won't. What I suspect will happen is that the company will have to pay just an egregiously big fine. The stock price will suffer, and there'll probably just be a complete shakeup across the board in management. That's probably what'll happen, and it'll take a while for the stock or the company to recover. Maybe it won't even recover to new all-time record highs. I don't know, but I think you have, and I think government regulators kind of know that, right? Because United Healthcare, this is a lot different than, let's say a tech company. I mean, this is people's like healthcare on the line here, unfortunately. So I think knowing that if there is some type of fraud that is at play here, you're going to have a massive fine, and a huge shakeup at the company. And that's how I suspect this will turn out. Peter says, I suspect the company will have to reduce premiums for its customers as a penalty. Perhaps, maybe. I just think that regulators need to play this one very delicately, just because, you know, you're playing with people's healthcare on the line, unfortunately. Hey, Patient Lobster, what's going on? Greetings from Israel. Well, welcome to New York City. I think you're gonna have a great weekend for it. This is Gallagher's. This is one spot I would highly, highly recommend going to. Gallagher's Steakhouse, right here in New York. Great spot. Edson is here. Lance, what's going on? Brad's Brain says, I will gamble, but only with small money.
You met the other girl.
You bought Rain Tech under $2. That's a gamble. I like the story, but doesn't fit the parameters. Yeah, sometimes you can get those, what do you call them? Like lotto plays, I guess. Now, a stock that I may buy just to kind of hold on, that not yet it doesn't fit the parameters of, you know, the CAN Slim metrics, but I do believe that one day it will, is Galaxy Digital, which we talked about, which listed on the NASDAQ today. And I don't even think that got as much publicity as it deserved, which is encouraging, at least for me. But Mike Novogratz's company, Galaxy Digital, finally listed on the NASDAQ here in the good old US of A. And if you listen to a lot of his interviews, you know, he was on CNBC with Andrew Ross Sorkin early this morning. The encouraging thing for me is not necessarily that Galaxy Digital listed on the NASDAQ. It was the overarching theme of the change in the regulatory environment towards digital assets in a major way that I think people are severely underestimating. Additionally, we talked about the fraud, well, not fraud, the cyber attack on Coinbase, the social engineering. You know, we beat that topic like a dead horse yesterday, but that's massive news, right? That is a massive breach that unfortunately happened, and a lot of customers were affected at Coinbase. But do you guys notice the price action today? Coinbase was up, and I think it closed the day up like 8%. And maybe somebody could fact check me in the audience here, but think about that juxtaposition, right? You have news, okay? Not a rumor, not, oh, Coinbase may have been hacked. No, that this was a massive data breach compromising possibly thousands of customers at Coinbase. All of their proprietary information, social security numbers, you know, date of birth, account numbers, and it's going to cost the company, well, they estimate it may cost the company anywhere between $250 to $400 million to clean this mess up. And the stock was up today, and it was up like 8%. So that is showing extreme strength in the market in terms of the digital asset cryptocurrency space. So that's really one to watch. Hey, Mike and ROC, what's up, Mike? Yeah, let's go Knicks, that's right. Andrew Donovan says CoreWeave, a new IPO, has been crushing it. Yes, CoreWeave. That's another one of those new IPOs that we've been talking about. You're 100% right. Hey, Mark Summers. Good evening, Tom. May have missed it, but are you going to head down to the Garden tonight? Knicks are winning big. I'm sure it will be a crazy celebration if they hold on. Yeah, I think I'm just going to make this U-turn here at Columbus Circle and start to head down there. Now, the problem, though, I think I may stop streaming when I get to Madison Square Garden because there's going to be no internet. It's going to be so crazy there that the internet's just not going to work. So what I may do is make a U-turn here at Columbus Circle, walk straight down 8th Avenue, through Hell's Kitchen, and end at Madison Square Garden. And then maybe I'll take a short video and upload it later, assuming the Knicks win. And assuming it doesn't get too rowdy, where I have to kind of boogie on out of here.
So the game finishes, then it's gonna get great.
Oh, Mark, you're a real estate guy. This was an interesting article today in the Journal. I have it here with me. I think you'd appreciate it and enjoy it. And I think it's maybe a little bit more relevant in your world, right? You deal with more single family homes. Check out this article. It's a little bit of a clickbaity headline. It says first-time home buyers are tapped out, but the thing that's more relevant or more interesting in the article is actually about the individual home builder companies. It talks about Pulte Group, it talks about D.R. Horton, Lennar, and it talks about the closing spread premium between resales and new homes. Here's the most interesting excerpt from the article. It says the median price of a new home currently costs 1% less than a median existing property. This compares with a 17% premium historically. That's freaking nuts. So historically, if you're gonna be in the market for a home, right? Let's say if you wanna buy a new home or you wanna buy a resale. If you wanna buy a new home, it's gonna cost you about 17% more, right? That's the premium. That spread has closed to 1%. And that's probably because things aren't moving, number one, and number two, a lot of those home builders, according to the article, depend on a healthy flow of new home buyers, right? First-time home buyers. And the share of first-time home buyers in the United States is really dwindling to its lowest rates it's ever been, and that's because of the elevated interest rates that we've been having. So, you know, these companies like D.R. Horton, Lennar, and the like, they're throwing so many incentives at first-time buyers, right? Interest rate pay downs and much, much more, just to try to move this inventory. It's going to be interesting to see the earnings outlook of those companies over the next few months. Wow, Hankers is Coinbase up 9% on the day. So even more telling. I mean, if you can, that's very, very reminiscent of classic bull market behavior, by the way. When you have really cataclysmic news like you had at Coinbase, right? Massive cyber attack, compromising potentially thousands of customers, personal data, which was really a big KYC failure. And then the next day the stock is up on big volume, 9%. It's pretty crazy. This is the Hearst Tower. This thing is huge. And also a very interesting building as well. Sits in between 56th Street and 57th Street on Manhattan's 8th Avenue. James Davidson is here from the Jersey Shore. Mark Summers says, yes, that's correct. I used to use the 10 to 20 spread, but clients are getting great deals on new builds. That gap is closed considerably. Sounds like an interesting article. Yeah, and I think it's probably more interesting for me, right? Because in our market here, we don't sell a lot of single family homes here. It's more like condo market. I guess maybe the same would apply for just sponsor sales here on a condo, but it must be interesting to see on the ground floor, right? I mean, you're probably talking to clients every day. I would say if you're in the market for a home, I mean, just according to the sentiment, it seems like, a lot of these builders want to play ball and deal. It seems like they may get aggressive on even probably the marks or the markdowns on just the valuations of the homes. So, I mean, if you come and you're a serious buyer, you could probably get some good deals on new construction in this market. That's kind of when is the opportunity to buy. Like when you see these things happening, when you see, I'm not really gonna say like the cracks starting to form, But when you have leverage in the buyer's hand, right? When it transitions from a seller's market to a buyer's market, buyers generally kind of get cold feet and don't want to buy because they want to wait for certainty. But if you start to see that you have more cards, right, you can go to one of these home builders and really start to negotiate aggressively, right? Knowing that spread has closed considerably and inventory is building up, right? So you kind of have all of that in your back pocket to kind of beat these guys down on price and get a really good deal. So Lance, you're back in Brooklyn. Would you go to the steakhouse tonight? Where do you usually go? Capitol Grill, right on near Wall Street, Broad Street. Running at altitude, welcome. You're right, the inventory build is the big part. Boundless Bam, thanks for joining us. Now this is looking up at the Mandarin Oriental, New York, and it looks like it's pretty filled. Mark Summers is one of the great incentives these builders are giving, is buying down rates 1 or 2%. Yeah, they also talked about that in the article. They said that you get like a 5% or maybe even like 4.5% interest rate, which is a lot better than going, you know, in the market now. What is the average 30-year fixed? What, maybe 6.25%, 6.5%? I mean, depending on creditworthiness of the counterparty, maybe even 7%. Who knows? But I mean, that's a good thing to know, right? Because taking it from the top, you know, what was the Trump administration's, you know, big goal, particularly Treasury Secretary Scott Bessent? He's like, he wants to get that 10-year U.S. Treasury yield down, but it's kind of went in the opposite direction, right? It's actually going up, and interest rates have been going up steadily. It's kind of like that old saying that nobody can really predict interest rates. And if you could predict interest rates, you'd probably be a multi-billionaire. Anyway, if you guys are enjoying the stream tonight, feel free to leave a like on the video and click the subscribe button if you're new. It also looks like the Trump International Hotel and Tower is pretty filled tonight as well. Ongoing situations, those are new builds meeting the requirements of buyers in light of the number of people turning 65 and likely downsizing. I'll have to read that again. Are new builds meeting the requirements of buyers in light of the number of people turning 65 and likely downsizing? I don't know what you mean by that. Are you talking about the overall square footage print of homes? I think builders in general are building smaller homes. Is that what you mean? I don't know. I'm not too sure. Alright everybody, we've officially made it to Columbus Circle. This is one of the main entrances and my favorite entrance to Central Park. And you have great views overlooking Billionaires Row. You can can see Steinway Tower right here, 157. And then you have 220 Central Park South and Central Park Tower right here. Now, if you want to look up a pretty interesting apartment, if you go on Street Easy and just type in 1 Central Park West, I forget the unit number. It might be 25G, I think, maybe 25G. But it's a 2-bedroom apartment, and it's listed at $16,500 for rent. It's like a 2-bedroom, I think 2.5 bathroom for $16,500. It's like if you were to buy something like that, right, a comparable place, your mortgage would be like 30. So like it's such a dislocation with price. Because if you want to buy a 2-bedroom, 2.5 bathroom, apartment in this building, you're probably going to pay, depending on the view, you're probably going to pay maybe like 3.6 to 5.6, depending on the view, right? If you have like smack dab Central Park views, it's going to be more. So renting that, maybe if you make them an offer, $15,000 even, that's actually a very, very good deal for the building and where it is, as opposed to, buying it, assuming you have to take out a mortgage. Just calculation just doesn't make sense for most people. This is the Limestone building, or the Limestone Jesus. 15 Central Park West. This is one of the most sought after buildings in the city. Obviously, the architect is Robert A.M. Stern, who is also the architect on 220 Central Park South. Andrew says, why don't you take a stroll through Harlem? Too far away from the office and the internet is piss poor. If you want to see Harlem walking tours, just go to our videos tab on the channel. So there's 2 categories on this channel: the live section, which is live video, and then regular walking tours. We have numerous Harlem walking tours. Just go to the videos section and search Harlem. But for whatever reason, even if we go up to the Upper West Side, and you guys will notice why we very, very seldom stream the Upper West Side of Manhattan, the internet sucks. I don't know why. And I've had every single SIM card. I have Verizon, I have AT&T, and I have T-Mobile. If you pass 72nd Street, it just buffers nonstop. Here's the main roundabout. I would say valet at 15 Central Park West. Just stunning detail.
Yeah, well, I will.
And great views looking back at Steinway. I'm telling you, the corner units here at 1 Central Park West are amazing, because you're looking directly down at 15 Central Park West. And some of those apartments in the building that is right on Central Park West, they're full floor wraparound balconies. Lloyd Blankfein has one, who was the former CEO of Goldman Sachs. It's really beautiful there. Steve Youngs has just read 432 Park's owners are suing the developers. That litigation has been going on for 8+ years. Hey, George Jones, what's going on? Good to see you. Probably not going to walk near MSG tonight. Just because there'll be no internet and I'll probably never get home. Oh wow, Ron says you knew Lloyd Blankfein in high school. Very cool. That's amazing. Mr. H93 says, do I think United Health is a good opportunity? I spent a lot of time talking about that, like almost an hour yesterday and about 30 minutes today. So I would just say you'd have to go back and check it out. But in short, no, I don't. I wouldn't pay any attention to it. Oh, but I guess there's a good analogy that actually, funny enough, Lloyd Blankfein always used to use. He says on Wall Street, and I'll paraphrase, he's like, on Wall Street, what I want to do is be patient and wait until I could find a big pile of money on the sidewalk and walk over and pick it up. He's like, what a lot of people try to do on Wall Street is they'll go down to the train tracks and they'll see a $100 bill on the train tracks. And in the distance, you'll see a big freight train coming by, right? And they'll say, you know, the train looks a little bit far away and there's $100 there. Maybe I'll, you know, walk over on the train tracks and try to pick up the $100 before the freight train comes barreling down and you know, kills me. He's like, I'd rather not try to pick up the $100 bill on the train tracks while the freight train is coming down, right? Which is kind of a funny, you know, way to explain building out an appropriate risk-reward ratio. So if you think about the market overall right now, if you've been watching the stream for the last 2 weeks, all the amazing opportunities, all the great stocks that are trading at 52-week highs and into new record highs, that have reported great earnings and have raised forward guidance in this environment. You know, you want to go and buy those names. You don't want to buy a United Healthcare that's down, you know, 50% in 2 weeks with a bunch of criminal fraud allegations that may or may not be true. It's just too much nonsense, right? Like, why would you want to involve yourself in that? Now, I'm not saying the stock's never going to recover. I'm not saying that you can't make money in it, but it's like, if you could buy anything in the market, why mess around with that stuff? It's like, you know, if you want to go on my X feed, if you follow us on X at Walks Wall Street, I wrote up a little synopsis of, you know, before the fraud allegations came out, somebody asked the same question to me as you just did. And I said, look, you know, a stock doesn't just melt down like that on that amount of volume, breaking the 50, the 200-day moving average in 2 weeks. You know, the stock was literally down, I think, 50% in a week and a half, unless there's some sort of fraud going on. Now, I didn't allege anything, but something massive, because somebody knows something, right? That's essentially the stock is going no bid for 2 weeks. That's big, smart money just essentially calling the trading desk and saying, fill or kill it, I don't give a shit what price, just get it off the books. Now, they may not have been the right decision, but long story short, I don't want to involve myself in that. Like, you know, you work hard for your money. The last thing you want is to have your money get caught up in some sort of, you know, fraud, it's delisted or whatnot, but there's a lot less risky things you could do that'll probably reap you higher reward. Mr. H93 says if you think the market is efficient, I would agree, but I don't think it is. Okay. Well, I mean, I'm giving you my opinion. You had asked me what my opinion was. And that is my opinion. Another thing that I've kind of noticed, which is a good lesson, which I learned early on, is that if a stock that you own, right? Let's say you have a monster position in a stock, and something like that happens, right? It starts to unwind and it cuts the 50-day moving average and it cuts the 200-day moving average, and you don't sell any of it because you're like, oh, this is crazy, it can't go any lower. And then what happens? It goes lower. In the investment business, you need to live to see another day because there are no guarantees, right? Nobody thought Enron was going to turn out to be Enron, right? So there's a lot of people right now that are like, oh, this is market manipulation, this is craziness, you know, these are fake stories that are floated out there from the Wall Street Journal. They're just trying to push the stock lower and make the short sellers money. This is fraud. To which I say, it doesn't matter. Even, okay, I'll play devil's advocate. Assume you're right. It doesn't matter. You've got to manage that risk and you've got to get out of that stock before it's down 60% and there's all these headlines of fraud allegations, because the stock made the move well before the fraud allegations, right? That the price action in that stock was telling you something was wrong almost a month ago. So the point I'm trying to make is that, yeah, it may not be fair, right? I'm giving you the benefit of the doubt. You know, this may be some big elaborate scheme by short sellers. Okay, maybe. I don't know. Let's assume you're right. But you can't, you know, hope and pray and cross your fingers that the stock is going to go back up. You know, hope is not a strategy. You've got to manage the risk, especially if you're running other people's money. This is a really unique view of 432 Park. Mark Summers says, Tom, are you concerned with the 10-year yield? Spiking again, not a good sign. But do you think that pushes us towards a bear market? I mean, we just emerged from a bear market into a new bull. So I think very unlikely. Right, we're just now emerging from a very, very egregious bear market, not in terms of duration, right, because it was probably the shortest bear market ever, but in terms of price, it was a brutal, brutal bear. Now, maybe the bond market's trying to tell us something. Maybe, you know, we'll find out in a month, 2 months, 3 months. Who knows? But maybe this is just the bond market telling us that we're going to have a little bit of a bump in inflation in the next coming quarters. Oh my gosh, I heard about that too. Yeah, Joe C., the New Jersey transit strike. That's crazy town. So is it, so what's going on with that? Apparently, nobody who lived in New Jersey today could get into the city. It was impossible if you took the New Jersey Transit because all of the engineers went on strike. So currently, to my understanding, there's no trains running to New Jersey on the New Jersey Transit. That's insane. Think about how frustrating that must be for the taxpayers in New Jersey. You know, you pay all these taxes and they can't even keep the trains running. Hey, what's up, Joseph Hardaway? Welcome. Brad's Brains has agreed, Tom. However, I made a critical mistake in February when the tariff talk crashed the market. Sold my Palantir calls for a $2,000 loss. They'd be up about 15 today. Damn, crazy. Look, I mean, I'd say to that, the hindsight's always 2020, right? Hindsight is always 2020. So that was actually probably the right decision. I can compare that to what Bill Ackman did, right? Everybody, I'm sure you've seen all the memes online about, Bill Ackman enters this massive Netflix position, right? And then Netflix reports, worse than expected earnings, the stock gap's down 20%, and Bill Ackman literally to the day liquidates his position at the dead low, right? And then there's all these memes about how, Ackman did the wrong thing, or he's an idiot, or he's a bottom signal. But that was actually the right move, by the way. Yeah, I know it sounds crazy, but what Bill Ackman did was actually the correct move in portfolio management. That was actually the right move, because you never know if a stock, right? If you do work on a stock, or you do work on a company, and it starts to not go in your favor, it breaks some of the parameters of what you laid out for that trade, and you don't get out, well, then you have no plan, right? And you can't live to see another day, because it's very possible that Netflix could have went down an additional 20%. You don't know. Nobody knows. It's always hindsight in 2020. Or it's always 2020 in hindsight, right? But, it's funny to say that, but it's true. That was actually the correct thing to do. I've had stocks where I ladder into the position. I build out my whole position, and then I get shaken out of the entire thing, and I lose like 5% of my entire equity. And then guess what? The stock levitates right back up past my buy point, and I have to build the whole position again, even higher than what I originally entered in it. So, you saying that you made a mistake on that, and during the Trump tariff crash, you sold out of some of your Palantir. That was actually the right thing, because nobody knew it was going to go on. But the right move is what you also did, is by getting back in, being willing to get back in. There was a great interview with Ken Griffin, who's obviously the CEO and founder of Citadel. And this kid was asking him, you hire some of the greatest traders and market makers on earth. What is the number one characteristic that you see of the greatest money managers? And Ken Griffin immediately said, he's like, the number one characteristic of my best money managers is when one of their trade ideas goes bad, they blow out the position and they forget about it. They lose the money, they take the loss, and they forget about it. And when they make big money, they don't celebrate, and wallow in victory for more than a day, right? It's kind of like that famous basketball coach. I think he says, I don't let my team, dwell on the loss for more than a day, and I don't let my team, cheer and champion victory for more than a day. Because if you put a trade on, right, and the trade starts to work against you, and the stock is down 7%, you gotta let some of that stock go. But people have this fixation that, it'll come back, it'll come back, it'll come back. Even if it does come back, think about all the other opportunity costs that you missed if you could have blown out that position and got in a leader, right? So be willing to have really a never-ending flow of high-quality trade ideas, right? Work your process, have a never-ending flow of very, very high-quality trade ideas. And when those trade ideas don't go your way, cut the loss and lose the money. Be comfortable losing the money, right? Losing money is not bad. Losing money is good. That's the frame that you should take. I put on this position, it's going against me immediately, blow it out, lose the money, forget about it. On to the next idea. Sheraton Hotel. William Carpenter says, hey Tom, does the Moody's downgrade scare you? The Fitch downgrade a couple of years ago was bad for the market. I'd say yes and no. Let's see how this plays out. It's quite interesting that they released this. What's it called? On a Friday afternoon. We'll see. Mr. H93 says momentum and investing are two different ways of managing cash. Short-term price fluctuations are rarely having any sort of effect on the underlying businesses. Well, look at all the major leaders in 2021. Right, take your pick. Right, look at Zoom Video. You know, ticker symbol ZM. That was one of the most winningest stocks in the market. Right, and that had great fundamentals, and it's still a good company, but the stock is a dog, and it'll never get back to its valuation. You know, stocks have a life cycle, and when stocks make their big move, you know, and I've pulled all the data on this, I have all the quantitative research on this, they go through something what's called a multiple expansion. So they have a multiple expansion of earnings, you know, price to earnings, price to sales, and then once the company starts to mature, then you have those multiples start to come down. And if it goes up too far too fast, like a lot of those, I would say those high beta growth companies in 2021, the lion's share of them will never go back to their all-time record highs, ever. Or it'll take, you know, 20 years, like a lot of those stocks took after the dot-com crash. I mean, look at Cisco. Cisco just reported great earnings, right? But Cisco is still, I think, a few points below its 2000 top. So managing risk is paramount. Managing risk is paramount. It's different if you're a portfolio manager, if your job is managing for P&L and generating alpha for clients, right? But if you're just buying the index and dollar cost averaging into the S&P 500, it's a totally different story. But if you are buying and selling individual stocks to generate alpha for clients, if you just buy these things and hold them forever without managing any risk, well, I mean, think about all of those growth stock managers in 2021 that round-tripped all of those stocks. I mean, Kathy Wood is one of them, right? And I love Kathy Wood. I think she does some of the best research on Wall Street. But, I mean, look at the lion's share of those companies. You know, Zoom Video, Palantir, I think Teladoc. I mean, I was in all those names. Right? So it's paramount to manage risk and, you know, have sell rules and blow out those positions. But, you know, if you have a retirement account like I do, you know, one of my retirement accounts is just indexed, just automatic dollar cost average into the S&P, and never look at it until I'm 70 years old. Then yeah, just continue to buy religiously. But it's difficult to do that with individual stocks. Hey, Mike, New York, what's up? We're now outside of Morgan Stanley. Ooh, let me see what time it is. Actually, I'll have to ask you guys, can we just do a quick time check in the chat? Because I may have to end this a tad bit early tonight. I have to do something. I think it's around, what, 10 o'clock? Maybe 10:15? $2,200, copy that. 10 p.m. Got it. Mark Bark, what's going on? Good to see you.
Actually, I don't know.
Mr. H93 says, yeah, but what was the valuation of Zoom during that time? Yeah, that's kind of my point, right? It's you have to manage. I mean, Zoom was a TML. I think through it from its trough to peak, it went up like 1,400%, something crazy. You know, and a lot of people are still sitting with that stock off 90%. Daniel says it's 5 in the morning where I am. You must be in Eastern Europe, right? Russia? Something to that effect? It's definitely an interesting conversation for sure. For sure. Michelle Henry, good to see you. Speaking of Russia, I was just in Brighton Beach. I actually have a few interesting deals I'm working on in Brighton Beach, Brooklyn, which is what we call in New York Little Odessa. I think it's the highest concentration of Russian and Ukrainian population in New York, the state of New York. Andrew O'Donovan says, yeah, I got to give credit to Kathy Wood. She definitely sticks to her strategy and keeps buying. And the funny thing is, she might be proven right, but it may take 12 years. Right? I mean, in theory, if you had bought Microsoft at the exact top during the dot-com bubble, and you just held through the 90% drawdown and waited 2 decades, still made a lot of money, right? This is now coming up on 30 Rockefeller Center. Wow, Knicks are up big, 91 to 51. That's crazy. Oh my gosh, 34th Street is going to be nuts. Pillars says, are you dressed in a suit or like some average guy? I would say both. Check out the line for Adele's. This might break the record for the longest line. Actually, maybe not. Let's see. Does it cross the street? Does it go south of 48th Street? I think it does. Looks to be wrapping around a little bit. That's crazy. I'd love to see the average daily revenue. Of Adele's. Here we have Fox News. Someone says, are we ever going to do a vlog of Philadelphia? Honestly, I would really like to get back to Philly. So, let me try to think of the last time I was in Philadelphia. Let's see. So, the last time I was in Philly, I took the Amtrak train. But then I took an Uber to this place called King of Prussia, I believe. So I technically was in Philly, but then I immediately left. I was in King of Prussia, Pennsylvania, which was extremely impressive place, by the way. I don't know if it's a place I would want to live, but the homes were insanely massive. Like, these were like, might as well have been mansion-sized homes there. But Philadelphia is a nice city. I mean, a lot of people are moving there. I wonder what the foot traffic is like, though, in downtown Philly. Daniel says there's a big drug thing in Philadelphia. Yeah, I mean, to be fair, the drug problem is everywhere. I don't think you could pick apart a certain city. I mean, you have it right here to the right. I mean, I'm not trying to downplay it, but I get it. Unfortunately, in a lot of the major cities across the United States, you have all these really terrible problems. Someone is asking if this is a normal amount of foot traffic. I think so. I mean, for a Friday night, I would say for sure. It's probably going to be a lot more in a minute as the Knicks, well, I would say as the Knicks fans come out of Madison Square Garden. We'll see.
Before you transfer
Yeah, Brad's Brains says I think Hood has a lot more room. I mean, I think it's the next Charles Schwab. I think it'll probably follow the model book template that Schwab followed. You know what I mean? Robinhood may be one of those stocks where you just buy a little bit for the kids and leave it in their account and just don't look at it, right? If you have a little, you know, account set up for your kids, maybe they're just newborns or something like that. You know, I think Robinhood is one of those stocks that has the story to be the Charles Schwab of the Gen Z generation. Honestly, maybe even Galaxy Digital too, by the way. That's a huge data center play, Mike Novogratz's company. And really an institutional player for the digital asset space. Hey, Melissa 2087, what's up? I don't really notice any difference in vehicle traffic either. Even though we have the congestion pricing, I don't notice a difference at all. If anything, it almost seems like there's more vehicles on the road. Anyway, we'll have to figure something out about market commentary when I go to Asia. I may spin up like another, I just gotta figure out what I gotta do. I'm surprised they don't have the Empire lit up for the Knicks. Ooh, what time is it? Quick time check in the chat. I gotta head out of here at 10:25. Around there. Ah, 10:13. Got it. Unfortunately, I got to pull the plug at 10:25 tonight. As we walk past Bank of America Tower. But if you guys are enjoying the stream tonight, feel free to leave a like on the video and subscribe if you're new. We usually do these every night, starting around 8:45, sometimes 9. Hey, what's up, Ignacio? Good to see you. Hopefully you're doing well. Wow, 96-62, 9 minutes left in the game. It's looking like a blowout, right? Andres says, are we going to MSG? Probably not. Mainly because there's going to be no internet. I mean, the stream is going to crash. That many people getting out of Madison Square Garden. I mean, how many people can MSG hold? 20,000? Or is that too much? 18 to 20,000 is the maximum capacity at MSG. So think about all of those people getting out of the Garden at the same time. You can't even make a phone call. The joyful one. Yeah, 19,500. Crazy. We'll see. And the game ends, what, in 9 minutes? Deese is more like 20. Well, maybe we'll end it a little bit earlier because I have some things to do tonight. But we will be live tomorrow. We're going to start the newsletter up in 2 weeks. and we'll be doing the Markets a Look Ahead stream on Sunday, and then hopefully next week we'll have something else coming out. Maybe we'll be doing a separate like 10 to 15 minute market update and commentary videos on a different channel, so we'll see. Anyway, if you enjoyed it, feel free to leave a like on the video, subscribe if you're new, and we'll see you all tomorrow, and have a wonderful weekend. Be safe and go Knicks. UniJ23, Mark Summers, thank you. RB, RPT, Bobby B, Dale, all of our moderators, Austin City Limits. Thanks so much, everybody. Peter, Daniel, DC322, Jack Jackson. We'll see you guys soon.